of that, we were fairly bullish on our outlook of what the summer would actually come out as. As it panned out, we actually ended up with a fairly rainy June as well as a cool August. So 2 out of the 3 months actually exhibited much more bearish behavior than what we would have anticipated. July was a different story, though. In July, we saw a near all-time peak load, and as a result of that, it helped to drive gas pricing to I would say about average levels. Certainly not bearish levels, but not overly bullish either, especially in comparison to the very high pricing that we've seen in the past 12 months in the pool. A big part of the bullish expectation of June was the expectation around bullish gas pricing for the AGT. The AGT or Algonquin line had expected to be constrained as a result of work at Cromwell. That Cromwell work did take place, and certainly for the first few weeks of June, it displayed very bullish behavior, very bullish pricing for that AGT gas. However, as a result of decreased load on the overall electrical system, it therefore decreased the need for as much natural gas to move into New England, and as a result of that, especially especially after the Cromwell work had been completed, we saw the pricing, the AGT pricing, come down quite a bit in comparison to where the market had traded it. One of our other expectations for the summer, and this was specific to June as well, was that the line outage from Berkshire to Alps would derate the New York interface. The line did go out, the work was completed, but it did not have the impact on the northern AC interface that we would have expected. So this ended up being a non-issue for the ISOs, and furthermore, just adding to the general bearish behavior of the month, without a interruption of imports between the two regions, it just further added to the downside that we were seeing during that time period. One of our other expectations had been for some negative congestion in the main zone because of work going on at the Orrington substation. That in conjunction with greater imports from New Brunswick than what we have historically seen because of the return of Point Lafayette. This for the most part did factor into the summer pricing. It did drive some negative congestion in the main zone, specifically as a result of constraints seen in Orrington South. However, the reduced load for the majority of the summer did help to alleviate some of that constraint as well. So overall, it was a relatively flat summer, with the exception of that month of July. You can see the summer pricing here for the last few years, and you can see that probably the most notable thing about 2013 was just the level of separation between June to July and then July to August. I talked a little bit before in regards to what drove that as far as the various bullish and bearish impacts that we saw. But just looking back at the previous years, you'll see just from an overall pricing standpoint how dramatically different the 3 months really came in. From a heat rate perspective, you can see that although especially June settled low in comparison to its historical neighbors, all 3 months actually were low in comparison to 2010. Again, the driver of the pricing in July being demand also had lifted the price of gas in NEPOOL. So that helped to increase the price more so than it actually increased that heat rate. So from a relative sense, although it was in line with historicals, with July being the priciest of the 3 months, we really didn't see anything out of line with what we would otherwise expect. Now, taking a look specifically at the summer loads, what we've done in this graphic, you can see where the loads for the 3 months lined up in comparison to the And probably the last thing to take from this slide is just how low August had come in. As a result of very cool temps, August was while it was expected to be a relatively warm month initially, really did not show the kind of strength that we would have otherwise expected. So taking a look specifically at what the drivers during those months, nothing out of the ordinary as far as what we would have expected to impact the load. We didn't see any specific examples of demand response or other types of kind of more long-lasting impacts to the overall demand picture. It really was based just on good old Mother Nature as far as what was suppressing those loads. In June, as I had mentioned before, we saw near record rainfalls and cool temperatures to go along with them. For July, we reached almost reached the all-time peak. The New York system actually set a new peak by a small margin. In August, again, as I had mentioned before, just strong high pressure persisting throughout the month drove cool temperatures. As a result, weakened the need for the AC load on the system, and then drove load and pricing down as a result. One of the other factors we wanted to mention as far as a driver of those bearish prices. Looking back in comparison to the previous years, we can see just how much of an impact the imports, or how much imports have increased over time. The next slide actually details the flows in from New Brunswick, and you can see year over year, and really in comparison to the historical years as well, just how much more is coming in from New Brunswick. This drove two different things. One, just lower pricing in general, as long as the main zone was not congesting. In cases where the main zone was congesting because of the flow of power in from New Brunswick into the NEPOOL system, this had either a slightly bullish or neutral impact on the overall hub price. That said, the times during which we were seeing the main zone congest were few and far between. So in general, it had a bearish impact on pricing throughout the summer. For nat gas, you can see that especially in comparison to where pricing had been expected to be for June, the natural gas actually ended up somewhat in line with the historical expectations. We saw a slight increase for the month of July, where demand had picked up electrical usage and therefore picked up demand on the nat gas pipelines, and then a significant decrease in the nat gas pricing going into or for August, I should say. So to summarize, you can see from this chart there's an awful lot of bearish factors that went into this summer. Really, July exhibited really the only bullish behavior as far as load was concerned. I labeled August as having a bullish impact of Gen. This is primarily the millstone outage that we saw, as well as some smaller issues with the Pilgrim unit. Gas I marked as bullish for June, where it was relatively bearish for the other 2 months. The bullish impact in June was really felt inside of that first week or so. So that is something that is a little bit misleading. It ended up bearish in comparison to expectations, but did exhibit some bullish behavior during that Cromwell outage and during the first week or so, where we saw some relatively heavy loads on the system. So moving into our expectations surrounding the fall. As we would expect, load is really not expected to impact pricing all that much. Keep in mind when we're citing above normal here, this is above normal seasonal temperatures. So 1 to 2 degrees above or below, for that matter, the relatively benign temperatures that we expect for a fall really is not going to drive much of a change in the demand, and therefore not much of a change in the pricing either. Ultimately, our expectation is that any above normal temperatures are going to be outside of the load area, meaning higher temperatures could be possible in the northern reaches of the Northeast, but outside of say Boston or Hartford, where the majority of the system load exists. I wanted to give a sense of last year where pricing had settled for the fall. And the thing that obviously I want to draw your attention to here is the stark contrast in average pricing from moving from September to October to November. That 62.30 average that we saw for the on-peak in last November primarily was driven by a sharp increase in gas pricing that we saw for the last week and a half of the month. This was the first time that we had seen a significant spike in the AGT pricing, and it ended up being representative of what we saw for gas pricing on the specifically on the Algonquin line throughout the entire winter. It really also marked the first time that we had seen a historical divergence from the heating degree days associated with the relative AGT price. So this is something that we do think is likely to continue. We don't see anything out there that would potentially cause that relationship to return to its previous levels. But also, it also creates a good deal of risk for the last half of or I should say the last third, really, of the fall, where if we do see winter weather or winter temperatures set into the Northeast early, we do think that there is a significant amount of risk to the upside of that pricing as well. If we look at the heat rates from last year, you'll notice one thing, that the November heat rate average does not come in line with what you would expect given how high that price was. I just wanted to point out that the reason for that is once we were up above the gas supply stack, in other words, once gas had started pricing to levels where it put gas-fired units above the pricing for oil-fired units, that the relative heat rate calculation that we use based on the nat gas pricing actually has an inverse has the inverse effect. So just because the relative heat rate was lower, we were still experiencing some fairly high pricing. And you can see that in this next slide, where you're looking at an average of $6.92 gas for November. Now, as far as load is concerned, as you can see here, last year we did see a bit of an uptick in November, once again highlighting that risk of winter weather setting in more sooner than anticipated. Right now, we do not anticipate early winter temperatures to set in. There's nothing in the longer-term forecasting that would make us think that would be likely. So for right now, our expectation of load for November is going to be in line with both September and October. So moving to one of the other major drivers of the fall, we're looking at the anticipation of generation being offline for maintenance. One thing that we certainly do want to call your attention to, because it's a very bearish factor for the season, is that we are not expecting any nuclear refueling outages during the fall of 2013. This is based off of our calculation of the refueling schedule based on the last time that these nukes went out. We have been seeing some issues with Pilgrim as of late, but those are not related to a refueling need. This is some other type of malfunction at the plant. So the outages that the outage totals that you're seeing on this page here are based on historical averages for the time period, and we have no reason to anticipate that the outages would base load to the system. It's not completely constant at 1.5 gig, but that's the approximate amount that we've been seeing over the course of the majority of the summer. So the loss of that into the NEPOOL system will be felt the same way as losing a nuke of that size. So it's just important to note that for the month of September, you should tack on about 1.5 gig to your anticipated outages. As I alluded to in the last slide, you can see here the last time that we saw each of the nukes go through a refueling outage. Again, we have very little concern that a refueling outage will be happening. So if we do lose anything, it'll be to some type of plant issue, and not because of a refueling outage. You can see at the bottom here, I'm showing by month the amount of capacity out out on a per month level. September, again, just remember that 1.4 gig is not including the phase 1 and 2 outage. So if you add those up, you're talking much closer to almost 3 gigs of baseload out. In October, we see again the lion's share of generation expected to leave the supply stack at 3.4 gigs. And in November, a relatively light number, possibly a response to the heavy pricing last November. But I do think it's important to note that the potential for bleed over of those outages in October into November does create a bullish risk to the situation if that winter weather does set in more quickly because of the fact of both increases in electrical usage and therefore higher price spikes on the gas side. The last thing that we wanted to step you guys through is our look at the expected transmission outages. Now, this is by no means an exhaustive list, but these were the outages that I had gone through and picked out as being most important for the time period. Start looking at maxes. This is in the main zone. This is going to provide, when coupled with the additional flow that we expect to continue from New Brunswick, a downside for the main zone. There are a few different interfaces that this would potentially bind, starting with the Maine into New Hampshire interface and moving as high as the Orrington South interface. Ultimately, the other factor to contend with here would be generation inside of the main zone, and by that specifically, I would mean the main independence unit, which does have a significant impact on Maine to the downside. The second thing on the list here is the phase 1 and 2 outage, which I had mentioned is starting in September. This is going to bring the phase 1 and 2 outage down to zero. This doesn't necessarily have a specific congestion impact, but certainly is something that will increase pricing overall, given where phase 1 and 2 enters into the NEPOOL system. Right on the eastern side of the hub nodes. So this is something that we would expect to have a pretty direct pricing impact. Next is Seabrook to West Amesbury. This is going to impact the flow of power in New England from north to south and cause downside both for New Hampshire and for Maine as well. The issue here is limiting the flow of power out of Seabrook, and as a result of that, that power not being able to get into NEMA will most likely have to congest something in either New Hampshire or Maine to the downside. And please don't forget again just that the additional flow of power into the system from New Brunswick is not something that we had to contend with last year, as Point Lepew had not returned to commercial operation until the end of November. Moving on down the line here, we're looking at an outage from Deerfield to Newington. This would be downside, and I should add in here not just for Maine, but most likely for New Hampshire potentially as well. Cardinal Lake Road, this starts to impact the east to west flow of power in NEPOOL. This is something that may not have as strong of an impact as some of these other outages, but could certainly be impacted by generation outages. Blackstone to Sherman Road is right along that same chain of 345s as Cardinal Lake Road. Again, this would be impacting the flow of power from east to west in New England, and therefore potentially increasing pricing in Vermont, Western Central Mass, and Connecticut, while decreasing price in the eastern side of NEPOOL. The Orrington transformer is specifically part of the Orrington South interface. That's going to make this outage a likely downside in Maine because of the Orrington South interface. Again, I don't mean to beat a dead horse here, but again, this is something that we think will have a significant impact, primarily because of the mix of relatively low load and the addition of imports in from New Brunswick because of that Point Lepew unit. The final outage I wanted to mention is Scobie to Seabrook, and we're back to the north to south interface as a result of this. This is a relatively lengthy outage for about 23 days, lasting from the relative end of October until about midway through December. Again, this is going to limit the flow of power south out of Seabrook, as well as power flows that come down from Maine into New Hampshire, and then ultimately further south into NEMA. This is one that I would be concerned with generation outages as well. If there is anything that were to be going out inside of NEMA, or more specifically inside of the Boston bubble, this is something that that would potentially increase pricing in that area, especially if we were to see demand move up higher because of the potential for cooler temperatures to move into the system more quickly than what we would seasonally expect. So in summary, I'm going to start with a bearish impact of just the lack of nuclear outages, and this is true both for New York and for New England. So it is rare that we end up with the nukes running through the entirety of the fall. We're still waiting for Fitzpatrick in New York to come back up to full, and Pilgrim on the New England side. But again, these are not refueling-related outages, and we do assume that these should be back up and running as soon as possible. Right now, we do not anticipate any generation to be able to exacerbate the anticipated congestion on the system. There are scenarios where we do see some risk of that. For instance, as I mentioned before, NEMA getting held higher if there was anything out in the NEMA zone during the month of November. But in general, it appears that there's very little risk of that as long as the outages on the schedule happen as planned. Imports are going to be a generally bearish factor. We are anticipating strong flows as we have throughout the year from New Brunswick, and specifically, we think this is a generally bearish risk for the Maine zone, especially considering the amount of work that we've identified in Maine. As far as transmission is concerned, our primary risks are downside, both for Maine and for New Hampshire. I don't think that the load will be high enough to be able to drive a lot of upside in other regions. So while we may see a premium at the hub versus either New Hampshire or Maine, we don't see anything in particular that is likely to lift the hub price itself. Now, as far as demand is concerned, demand, as we would expect out of an average fall, is going to be relatively benign. As I mentioned earlier in the presentation, any above seasonal anomalies should really be outside of the load areas, and as a result of that, will have minimal impact. And finally, as far as gas is concerned, we do think that the fundamental factors which had lifted the gas price for last November are still in play, but at this time we don't see any likely anomalies that will decrease temperatures early in comparison to seasonal levels, and as a result drive that type of spike in the gas price. So while it does remain a risk, we don't see that as a likely occurrence this fall. All right, everyone. I will give everybody a second to register any questions you may have. Let me just say quickly, thank you for your attention. We appreciate you attending. If you do have any questions, please feel free to enter them now, and I will address them before ending. Hi again, everybody. Just a couple of questions to touch upon. Somebody had asked what interface was going down in September that I was referencing as far as driving some additional base-loaded outage. I'm sure I probably beat you guys over the head with that enough, but just in case I didn't say it, it's the phase 1 and 2 interface that comes out of Quebec and drops into the knee pool system at Sandy Pond. So this is on average about 1.5 gig of power coming into the system, just to the east of the hub nodes. The other question somebody had raised is a good one, and it has to do with in the recent days we've been seeing some congestion at the hub itself, which resulted in 2 extremely high clears for knee pool. This is something that I don't know that we've necessarily been able to fully explore yet, but at this point we are comfortable saying that we do assume that is related to 2 separate line outages that are actually part of the hub definition. Primarily, this resulted in extremely high congestion costs for 4 nodes inside of the hub. We're actually going to be looking at this more closely coming up. I can tell you that the line outages in question, which are Millbury to Webster Street, and then Treasure Valley to Wendell Depot, they're happening simultaneously from the 3rd of September until the 26th of October. So they are out for quite a bit of time. We don't expect that the congestion is going to have a lasting impact as a result of the load falling off. But it is something that obviously we're going to be keeping a close watch on, just given how much the congestion can directly impact that mass hub settle because of the fact that those nodes are part of that hub definition. But I think that answers everything. Thank you very much again for your attendance. Please, if you do get a chance to fill out the survey, it is greatly appreciated so that I can do a better job of this next time.